Okay, so we're going to start by looking at the dollar, okay, as I always do. And the first thing I want to point to your attention is last week we spoke about how this area here was liquidity and potentially there was an imbalance here. Now, I've already removed it, but I was looking at this area right here. So if I go onto the 15-minute, I was expecting that price would actually this Wednesday, Monday. Let's just look for Monday. So from this area, I was expecting this low to get taken due to this break of structure here. However, I thought that as the low was taken, it may actually accumulate and start to break back up, but it didn't in the end. And as you guys can see, it just kept breaking down. Let me just stretch out my charts a bit longer. So as you can see here, price then ended up breaking down. And then Wednesday, there was FOMC, I believe, or maybe that was Thursday. But there was some news that pushed price into the imbalance, right? Came back up, broke back down in Asian zone during the Asian session, sorry. And then we got the tap into that demand there. Now, when I'm looking at the dollar, by the way, guys, I don't trade the dollar. I think some people get confused. They think that we actually trade the dollar. But you're looking at what's happening here, and then you go into your other pairs as well, okay? So what you do is, as price comes into this demand zone here, you'd have a correlating supply zone on Euro USD, okay, which I believe was up here. Yeah, I might be wrong. So as price taps into here, right? Then you'd be looking to sell the euro, understanding that the dollar is pushing upwards. Okay, so then we got that change of character. And so this is what I'm expecting to actually happen next. But as you guys can see, textbook, it filled in the imbalance, right? It pushed back up. And then it came back down into the demand zone. So this is why we usually say wait for the order block. Okay, unless the imbalance is less than 10 pips, sometimes you can enter off of that. Okay, but if it's demand zone, and really this is a 4-hour demand zone, so for me, I would have been looking at 50% of this to get filled. However, as it kind of tapped off and you saw the bullish engulfing candle here, this is where you have to be kind of like reading the candles. The candles are language themselves, and it's telling you something when you see the price reacting in this way. So based just off of this, right? So if we just highlight this area, and I'm going to make it red so you can see it. So just off of that, just off of this engulfing. Now, of course, this is not a change of character on a higher time frame. However, if we drop down to lower time frames, okay, you can see that the low of the Asian range got taken. It tapped into the demand, which lines up with our confidence. Now, on a lower time frame, okay, this is the 15-minute, you can see the change of character here. Okay, let me mark that out for you guys. So you can see the change of character right here. So based off of this change of character, right, you would have probably more likely marked out this demand zone here, possibly, which it didn't tap into, unfortunately. And you would have probably more likely missed this trade. However, based on that 4-hour, right? So that 4-hour, it did tap into it, in which if we go down to maybe a 5-minute, I'm just trying to look for ways we could have got into this. Okay, cool. So based on that 5-minute, understanding this is your whole zone, right? So if you'd refined it, you'd have refined it here, you would have been possibly waiting for this. If you guys, and I get this question a lot, in terms of which order block to go through, the spring order block, the chop order block, I always say go for both, because sometimes they both give you an opportunity. So we have the chop order block here, which did get mitigated, okay, once already, but then it produced another chop order block again. So you could say a break of structure order block furthermore, okay, which came into this area. So, sorry, I know this is a lot of boxes. So This is our overall 4-hour zone. Yeah, this box right here. Let me just point that out. POI. Okay, so that was our overall zone. Yeah. But then once price tapped in, we would have refined it down to this order block. This is on the 5-minute. So one here and one here. Now, I always say when price taps into your order block, okay, you want to go for both of them. Because the thing is, in this case here, and this is a wonderful case to show you guys, had we waited, okay, for the extreme order block, although the extreme one is practically the best place you can enter from, okay, don't get me wrong on that, but had we waited for the extreme one, we would have never got tapped in, okay? And I see this on many people's charts, even people on social media, they always have like 2 entries like this as well, okay? So there's nothing wrong with waiting for the extreme, but you would have not got tapped in. At the same time, it's okay if you go for this order block here, because look, this order block was the one that gave you the move and ended up running to take this high as well. Okay, in which what we would have aimed for is the Asia high. Okay, you could even aim for this imbalance here. But as you can see, you would have had to hold through Asian zones. And based on this being a high time frame area, I would say you guys need to back test this, okay? Because there are certain times, like for example, in this case, you would have been able to hold through the Asian zone, but the idea is that you don't want it to come all the way back to stop you out. Now, based off of this high time frame POI, it would have worked, okay? But don't think it's always going to work, and you need to build up case studies and back testing data for you to understand, okay, when is my trade more likely to hold during the Asian session? Okay, so I just wanted to put that out there. So you would have been able to enter here. And again, I want to highlight as well, putting your stop loss in a place where if you're wrong, it invalidates you. Okay, now I would have also looked at this area, okay, as in, I should be analyzing USD, but I'm showing you guys because you can look at other pairs in the same exact way. There's an imbalance here as well. So there's a chance that it could have tapped into this imbalance. Okay. Now, some traders would put their stop loss all the way, below this low here, but then obviously that drastically reduces the risk reward. However, for me, I would have put it just below this last candle here. Okay. Just below this last candle. Just so I know if price taps into this area, it invalidates this area being a good place to buy. Okay, so that's how you should look at your trading. So anyways, okay, it's pretty set up in terms of what we're expecting, as I've already done some price analysis, to be fair, during the week on what I think is going to happen next. I believe price will come down into this demand zone here that I've marked out. The imbalance, I can remove this now. And we should see a reaction and it go bullish, okay? Now we have a change of character on a higher time frame as well. Okay, if we just draw this out, just let a few people in. Let's go to the daily. Okay, so we do see a wick in this area on the daily, but we see a massive rejection here from the demand area as well. So this was a liquidity grab. It grabbed everything below this daily candle and then pushed back up. And then the last candle pushed up even more to take out these highs. Plus we have this trend line liquidity here. So from a higher time frame perspective, it makes sense that price is going to push up as well. Okay, if we look on the 4-hour, it's a full body close. I expect price to come down and go back up. In correlation with Euro USD, now last week I did take a loss on this area here, but that's fine. Like I said, 1%. Okay, but as you can see, price, we did expect it from where we last analyzed. I thought it may come down to this area, take out this Asian low. It didn't. That's fine. It decided to come down a bit to take out the current Asian low and then push up. And if you look in the charts section in the Discord, you'll see what I was thinking throughout the week. Now, this area is already mitigated, so we don't need to look at that either. We can remove this. And what I would do is I would extend my trend line up, okay, as much as I can, hitting that last point like this to an area where it makes sense. These wicks passing through, they're kind of like liquidity grabs. So It doesn't have to be like fully perfect. Usually when you're drawing trend lines though, it does need to be perfect because that's how I used to draw them back in the day. I used to make it so perfect that the wick is literally touching the line. However, understanding liquidity is anything below the wick. I mean, anything below the trend line is all liquidity. So if we highlight that, as you can see, look, this trend line liquidity got taken out. This trend line liquidity got taken out as well. And we now have a change of character to the upside. This liquidity got taken. I can remove that now. And furthermore, the change of character was here. So the change of character was at this point. And the break of structure was at this point. Okay. Now we have tapped into that higher supply, and I believe we've now also changed character back to the downside. So let me just draw that out as well. So this is another change of character from this area here. As we go down the time frames, it looks like we have more bearish structure. And if I look at the high time frame, which I'm going to do in a second, is that not working? Okay, so we have that change of character there. So let's go back to higher time frames to see the overall narrative. Okay, so we're going up. We still haven't tapped into this area, but we do have this change of character, right? And break of structure to the downside. We haven't made a newer high. Okay, I would have been expecting for us to make a newer high up here. However, we've had this change of character and this break of structure. Now, what we really want to see, okay, is to confirm this is bullish, is for this to push higher, okay? But after looking at the dollar, I don't think so. It's going to push down a bit. Dollar's going to go down, which means the euro is going to gain a bit of strength. It may actually tap into this supply zone right here. All right, so let's mark this out. And then let's refine it actually to here. This is the last area. And somebody, and I get this question a lot as well, they say, how do you know this is a, why do you use these kind of candles for marking out your zones? If we go down to a lower zone, you'll be able to see the engulfing candle, which is right here. Okay, that's why we do that. Even if you go down to a lower, you can see it again. See? So it's just based on experience. After some time, you guys will do the same thing as well. You'll realize, okay, yeah, this is a wick, even though it's like a doji candle, as they call it, retail call it doji candle. You know that it's an order block. Now, this area has been mitigated quite a few times. It has taken the low each time. As you can see, look, when it done it the first time, it took the low again, taking out early buyers, right? Then it took it one more time and then it broke upwards. I suspect that we are building liquidity right now and price will basically come into this supply zone here and then push down. And that correlates with what the dollar wants to do as well, which is go down and then go up. So euro, I believe, will go up and then go down. Let's just mark out this. Okay, we'll find it so we don't have to do that. Yeah, okay, cool. Now there is an imbalance here. I'm going to mark out this imbalance for the sake of understanding. Okay. That I don't want to now, in hindsight, if I lose this sell, be like, okay, why did that happen? It's because I didn't look for all reasons or possible reasons why my trade can lose. And that's not from a fearful standpoint of, oh, I don't want to enter this and hesitate. It's from a standpoint of, okay, cool, just in case my trade loses, why would it be and from where? And so if I have this imbalance here, this imbalance, I believe, is less than 10 pips. Yep, it's 5 pips. I can enter off of this imbalance right here. Okay, other than that, either we'll break through and keep pushing up, which could possibly happen, or we'll reverse off of this area here and come take out all this trend line liquidity that you guys can see right here. So let's mark that up as well. So that is my idea for Euro USD. AUD USD looks like it's doing a similar thing, although it's moving very much different. Very much different. Okay. Actually, I haven't analyzed this. I can do this quickly. So we have this area POI right here. There's an imbalance below it as well. I'm going to do this very quickly. I don't know what, I think I deleted my analysis from last week, which is quite annoying, but I should have put it back on. Nevertheless, I was probably given an example. Okay, that's fine. Okay, so we can see we've smashed through that, but it was a liquidity grab because it just wanted to take the high. Furthermore, okay, look, check this out. So you see what I was just talking about on Euro USD, understanding that, okay, let me draw out this imbalance just in case. So if you look at AUD USD, you can see that price, why did it go above this area? Because there's an imbalance right here. See, it tapped the imbalance, then dropped. See, now, if I had not been paying attention to this imbalance, so I didn't draw it, I would have thought, okay, cool, you know what? My trade is invalid. This is a break of structure. But because it tapped the imbalance and then dropped, you can see that it lines up with my overall analysis, okay? And then there was this imbalance that was left behind as well, in which price came into it, but furthermore, I believe it tapped the supply zone, left it by a few pips, but it's fine. So AUD USD, okay, understanding the same thing with the dollar, I can go back and reference this. Let me remove all of this. If I believe dollar is going to go down then up, then I believe AUD should go up then down. Okay, so let me line that up. So is there any trend line liquidity? I don't see you guys drawing enough trend line liquidity sometimes. Like you draw everything else, but you forget the trend line liquidity. You guys need to start drawing the trend line liquidity because this is what gives you targets for your trades. Okay. So, and it gives you confidence. Okay. How long should I hold? Where should I hold to? Those kind of things. So I understand this is trend line liquidity. Okay, cool. This has been going up. This can get taken out. Okay. Let me jump on the 4 hour again. We go to the monthly. Yes. So I can see we haven't broken structure to the downside. This may be a spring. Okay, so now, right? Yeah. Sorry, guys, I have to draw this all in again because I removed it last week. So I'm just doing it quickly though, in case you guys think, okay, why is he jump? Why didn't he start on the monthly? Why is he starting here? I had this all drawn up, but unfortunately. So look, we have this area in which price can potentially reverse from. And we have the change of character and we expect price to now move from this area and push upwards. Okay. So again, like this is possible, or furthermore, actually, price could actually push down if the dollar is like bullish. Okay. So I expect AUD to start moving down. GBP USD. Okay. See, so my analysis is still here. So we have this area that will confirm the break of structure. It still hasn't happened based off what we thought would happen last week. It did take the lows of this area, tapped into this demand zone. There is trend line liquidity here though, however. So let's just draw that in. So I suppose price may come down and take this actually. GBP USD, I'd wait for a bit more price action to happen. But in the meantime, I can draw out the liquidity that I can see in the area. Okay. So I think I'll just leave it like this. Okay. Move this. And we'll remove this area as well. So let's go straight on to gold. Let's see what gold has been saying. Okay, cool. So in terms of gold, we have this supply zone that has finally been tapped. Okay, I drew this months ago, and you can see that it's finally been tapped, and we should expect a change of character now. So for those of you that have been trading gold, okay, I believe the change of character actually happened here. Right here, it's the last lower high. No, it's the last higher low. Yeah, it's the last higher low. Let's point that in there. So price change character. Then it came back in. It has left a double top, as retail would call it. So the M pattern. So that's equal highs to us. So it may be a thing where price can potentially like come back up and then drop again. However, you have to wait and see. You have to wait and see, to be fair. I would still be inclined to sell this because we didn't make that break of structure upwards. Okay, so had we done something like this, this would be the break of structure area to be bullish again. But since we haven't done that, still be aware of this equal high and look for areas in gold where you can sell for those of you guys that are looking at it. Okay. So I can remove all of this as well because this didn't get respected. But as you can see, look, from this area here, we was expecting price to come up to go upwards, sorry, and then push down. But instead it went down first a bit, built a bit, probably more liquidity here, and then started pushing up. All right. So obviously, as you guys know, I personally don't trade gold. So that's the only reason why this analysis is still old. Furthermore, though, we did speak about a few weeks ago, I put a question in the chat asking, where do you think this trend will hold? Obviously, most of you realized it wouldn't. It broke down. And then as soon as it's taken enough trendline liquidity for people to think, okay, we're going down, let's sell now, it comes back up. It's just manipulation, okay? And when you understand liquidity, that's what will help you basically not get manipulated and understand where the price is going next. So last but not least, now let's look at US30. Okay, cool. So we had this area here. I didn't take any trades last week. I only took EURUSD, but I think I must have drawn that for another reason. But as you can see, look, price looks like it's respecting, okay, this demand zone here because it's tapped into it one time, then it's come in again, maybe to mitigate this order block. We have that change of character on the lower time frame. It's broken past this equal high, taken this liquidity. It has reacted off of this supply zone. However, it hasn't made a lower low. And the fact that it's reacting off of this demand, so the fact that it's respecting it, is actually a good sign that price is possibly bullish from here. So if we drop down to the time frames, what we should look for is an area where there's imbalance and a change of character. So we have that right here. You guys can see it right here. Let's just label that up. And what we'd be looking to do now is enter a buy from this area here. So let me just look for any areas where there's a bullish engulfing with an imbalance. So there are areas here, but you know, when you see stuff like this, it's like, okay, it's pushed up, then mitigated, then pushed up, then mitigated, then pushed up, then mitigated. I like for areas to be kind of like this. So it's pushed up. This would have been a very nice entry. Okay, but this was Friday, so it is what it is. But if you're in that case where you're seeing a lot of price action, like I just mentioned, like push up, go down, and you can see like it's mitigated quite a lot, what you can do is you go to a higher time frame and you look for a cleaner order block. Not higher time frame, but like basically it's still lower, but it's not as high as like, you know, the 30-minute, etc. You can even start looking on the for example, I can start looking on these time frames. 16-minute, perfect. Okay, that was just by chance. Okay, so we look on the 16-minute, and now you want to look at price. We can see, what is this? Trendline liquidity. It's right in front of your eyes. Price to tap this area and then push up like this. So these are the only areas that I'd be looking to buy from. All right. So, oh, hold on a second. We have some. One second, guys. Yeah. Can you guys hear me? Yeah. Okay, good. What can you? Oh, I've been doing this in a while. Oh, I don't think it's working. So guys, sorry, I just took a look at the chat just now, literally. But okay, cool. So so that's pretty much the analysis for the week. Okay. If you guys have any questions now, what you can do is if you want to if you guys want to actually ask any questions, you do need to have your camera on, okay? And then we'll be able to answer your questions. Other than that, if you don't have your camera on, then we won't be able to answer any of your questions. Does that make sense? Okay, 1 second. There we go. Cool. So as usual, just put your hands up, guys, and we'll answer your questions in that format. But you need to have your camera on as well. So Khaled, okay, cool. Yes, Khaled.
So, you're right.
Yeah, I'm good. How are you?
Yeah, alhamdulillah, all good.
Your
You know
trading
when
has been improving, by the way. Well done.
what's that?
Your trading has been improving, by the way, as well. Well done.
Oh, thanks, man. I was just doing it like every day in it, so
Yeah,
I'm getting there. Yeah. You know when you're looking for a change of character, yeah.
yeah.
Is it from the wick or is it for the body? From the body of the candle?
So it's
Like,
from the body. So the main thing is the body needs to break the last higher low. So for example, in a bearish situation, you see price coming down like this. Okay.
mhm.
So the body of this candle here needs to break the last high here. So for example, if we look right here, so this was a change of character right here because all of these candles broke way above and you have a body close. So if I go into a higher time frame, like an 8 hour, maybe 12, you can see this quite clear from a daily perspective, right? So all of this was bearish until this area here. And then now you're seeing price actually react and start to go up.
Okay, so after the change of character, then when you look for obviously the supplies or the
Yeah.
demand zone.
Yeah, you look
Okay.
for the demand zone in that way, like literally just like how I've had it here.
Mm-hmm. All right, cool. Thanks, man.
No worries. Yes, I will lead. How you doing, bro?
Assalamu alaikum.
Walaikum
How
salam.
you feeling?
Yeah, I'm good, man.
Alhamdulillah. Yeah, so basically my question was, okay, so let's say for example, I have a 15-minute POI, right? And then I
Yeah,
go into let's say then I take that 15-minute POI and I go into the 5.
yeah,
I end up finding, let's say a lot of the times I find a clean order block. I mean one of those order blocks where it goes up and then you get like a straight bearish candle.
yeah,
There's like for the majority of the time there's always a imbalance right under it. So I find that I have like a decent amount of order blocks with imbalances right under them. And my
yeah.
question would be, do I like how do I go about that? Do I just like what holds more significance for my entry, the imbalance or the order block?
The order block. From experience, we've seen that the order block holds more weight than the imbalance because when it comes to the imbalances, like usually they get filled 50% or filled all the way, and then price just literally flies off, if that makes sense.
Okay. And another question I had, I was testing so like let's say I have like a 15-minute order block, right?
Yeah,
And it'll be unmitigated, but let's say it's pretty it's a pretty sizable order block.
yeah.
Is it still like liable to use 50% of that order block? Like, you know how people will sometimes use 50% of an imbalance, can use 50% of an order block?
Yeah, you can, but with the idea with the 50% of the order block is if it's on a higher time frame. The reason why is because you know how we refine order blocks, right? So
Yes.
let's say this is a 4-hour order block. Now, when we refine basically to find the most like a nice area to enter from with the least amount of stop loss, right? And we refine like this. However, if you use 50% of a higher time frame order block, what you're basically doing is kind of like refining it, but not in a proper way. You're just basically cutting out 50% of what's below the whole order block, if that makes sense. So all of this noise, you'd basically remove it like this, and you'd have what's in here. But then you can still use half of this, as in like not half, sorry. You still use this whole area to work from, if that makes sense.
Okay. And that would be more like that would be more efficient if, let's say, the open, because like how sometimes before like a big move happens,
Yeah.
It'll mitigate the open of it and then fall, but then the 50% will still be unmitigated. So I can still have a potential entry at the 50% of that order block.
Yeah, basically.
Okay, cool. Thank you. I appreciate it.
No worries, man. No worries. Next question. Yes, Ali.
Hello, Saleh.
Yes.
Saleh, assalamu alaikum.
Walaikum salam, Ali. How are you?
I'm good. How are you?
Yeah, I'm good, man.
All right, Saleh, say if I have like a supply zone, yeah, or demand zone, yeah,
Yeah.
and then right above my supply demand zone, there's like a liquidity point, like maybe like an Asian high or something, yeah, and then switch liquidity, but just with a wick, yeah. That my supply zone, but it doesn't full candle on my supply. It just wicks through the whole supply, takes the liquidity point. Would that supply zone still be valid?
Yes.
Or demand zone, yeah. All right, that was my question. Thank you.
No worries.
Thank you.
Yes, Tawheed.
Assalamu alaikum, man.
Walaikum salam.
How you doing, man? You right?
Yeah, I'm good.
That's
How are
good,
you?
man. Alhamdulillah, man. So do you know when analyzing, so on US 30, so on the 2 hour time frame, I see what I could believe to be a whack-off distribution, but I see no original point of entry from a higher time frame, so like daily or anything. I just seen an area where it could possibly be like a distribution. Do I need to find a POI in like a daily or even a weekly in that zone? So from where I've marked out my Wyckoff distribution, so in between your two boxes there, what I can see is possibly a Wyckoff distribution in the 2 hour time frame. There's no original POI that marks out the zone, if that makes sense. I just seen an area where I could possibly distribute from. Should I still enter off it, or do I need a valid POI?
You do need a valid POI. This will help you like negate like unnecessary losses. But I think from what I'm understanding you're saying, so let's say you've jumped onto the chart and you're basically you've identified an area of distribution by eye, right? Yeah. All right, cool. What you do then is just kind of like hone into that area and just try and like analyze it, understand what's going on here. Is there trend line liquidity here? Is there equal highs, equal lows? What's a possible area I can enter from, if that makes sense?
Okay.
You basically want to add all your confluences in there, analyze, break it down, and then find an area where you can enter from.
Okay. Yeah. No, that makes sense. I've got another question. So do you know when I see trend line liquidity, how do I analyze that? Because I know change of character means that price will retrace. So if it's a change of character in the downtrend, price will push down, then go back up, and then push down for obviously an order block to short it from. But trend line liquidity, how do I put that in analysis? When it breaks, what does that mean for price?
So trend line liquidity is just an area of that you can kind of target, if that makes sense. So for example, right, this is an accumulation that's occurred right here.
Okay. Right? Yeah.
Okay, well, 1 second, guys. Yeah, 1 second. I still got a question, man. Don't worry.
That's cool.
All right, cool. So, so for example, right, I understand this is trendline liquidity going down from this area to here. Yeah. Now, as prices accumulate here, what you can use the trendline liquidity for is areas to target. Obviously, you have to be able to hold that amount, but on a lower time frame, let's just say this is a lower time frame, even though it's 2 hours, let's just say it was 5 minutes. Yeah. Let's say I was entering based off of this area here. You can basically target the whole trend line and take profit above the trend line, basically, wherever it starts from.
Okay. So when it's broken, where the trend line started from the downtrend, that should be your final take profit.
Yeah, you can aim for all of it. Yeah.
Okay, that makes sense. Yeah, man. So last question, but what does the sprint
go
look like? Because I'm really trying to, because I can find distribution, but it's really hard for me to find accumulation. I mean, I know that accumulation means that price will just go up, but what does a sprint like generally look like?
Okay, so I think you're overcomplicating it a little bit. Virtually, it's the opposite direction of what obviously a accumulation is. So if I flip this chart, look, this was accumulation on the other side, right? But now it's this is a distribution here, but here's an accumulation. This was a distribution flipped, but it's actually an accumulation. So if you're finding it a bit hard, what you can do is just to train your eye, you can flip the chart and you can look at it from that angle. Just remember to flip it back. Okay, so with the Mac it's Option I believe with a Windows is Alt I or Control I, something like that. But if you're saying that you can spot distributions, like you have no problem with that, you should be able to spot accumulations as well, because it's basically a similar schematic, just the other way around. So where
does accumulation just mean that price is going up? Is that like just the general term for it?
No, what it basically means is smart money is coming into the market and they're buying up, but eventually prices going to go up.
And that's the same thing with distribution, isn't it?
Yeah.
So what does counter trend? What does a counter trend trading mean then? Because I've heard that term, but I can't.
So with counter trend trading, that's when you're trading against the trend. So for example, right, and this does take some practice. So for example, this would have been a counter trend trade. You can see that price overall has been going down, right?
Yeah.
So there was an accumulation that happened here on a lower time frame. Yeah, if we go to like a 15-minute. So let me just go back to that area. So there was accumulation that happened here. And if you had bought based off of your confluences or whatever you see here, then you would have been counter trend trading up until a certain point, and then you would have basically gone back with the trend.
Right. Okay. Yeah, that answers all my questions, man. Thanks so much, bro.
No worries, man. Anytime.
Thank you. Assalamu
alaikum. And we have Shamaki.
Assalamu alaikum, bro.
Walaikum salam.
You know, I've just finished a course in it like a couple of weeks ago.
Okay.
And back testing.
Yeah.
But I'm struggling with back testing because you know, like when you're going back up to a certain amount, when you start to refine, it will just completely go off. And
okay.
That's what's happening. Is there like any tips for back testing that you have?
1 second, guys. Yeah. So in terms of backtest, so there is, have you watched the how to backtest video 1 and 2?
I watched them on repeat both. Yeah.
Okay, cool.
So
in terms of that, right, what I would say is the easiest way to do it.
I've done what you know when you like I make it into like a thin line.
Yeah.
And you keep pulling back. I've done that, but even then sometimes I try to refine to like 5 minutes.
Okay, cool. So I believe no, we have one more question. So what I'll do, just for the sake of this and just for showing you live, sometimes, although I've shown this before, it's fine. Basically what you can do, there's different ways. And what you can do is you can find the lowest time frame possible, okay? Then you obviously click here, you make the chart thin, and then you just go back as far as you can, and you basically replay like this, and then once you've gone back to your area, you basically reset the chart, as in like you double click on the numbers again, and you'll see price here. And as long as you don't go below 5 minute, you can go up, above, anything there, then you'll be able to play price out as you see fit, but starting from a clean chart, what you want to do is, once you've done that, you just go into the monthly, you mark out your areas, you find your areas that look interesting to you. So right now we can see that this is a downtrend, okay? So what I tend to do is I mark the last recent point. So this is the last supply zone. I'll mark that out. What you can also do as well, for the sake of practicing, you can also mark out other recent points as well.
Mhm.
The only reason why I marked out, I would only focus on the recent one at the level I'm doing, because I know that it will take months for a price to come back here anyways.
That one that you marked up, the one at the most recent one, isn't that an equal high?
What, this one?
Would that be liquidity? Because
I would say yes, but because this supply actually broke structure, that's why I'm still marking up.
okay.
So for whatever reason, it's a protected high, so it hasn't been broken above. However, yes, based on what you just said, you could even mark this up now and be like, okay, now that I can see like liquidity above there, if price decides to return, this high should get taken out.
Yeah.
So then you just scale through your lower time frames, you refine it as much as you want. So we could refine this on the 3-day, for example, maybe. Let's go to the daily. Okay, so you can see it's a bit of ugly price action here, but you could refine it down to this supply here, like this. But now you want to look for the more recent supply that broke structure here. So then I would use this area. Why? Because there's an imbalance before it as well. And these are the two areas that I'd be looking at. And you just keep basically cycling down the timeframes until you're inside the day and you can see like the Asian zone. Why is my Asian zone not on? Okay, so for whatever reason. Anyway, until you see, okay, yeah, no, you can't see now. The Asian zone, and now you start working within a range, because what you want to do is you want to understand your lowest point and your highest point that makes sense to you. So this is my lowest point. If price comes into here, it should break upwards. If price comes up to this area, it should go downwards based on me going from high time frames down. Does that make sense?
And also one more thing, you know, so I understand the strategy, yeah.
Yeah.
But is it, because every week you'll do like a week analysis. So does that mean you're waiting for that to play out?
Yeah. So if I just forward, so every week when we do the weekly analysis, when we do the weekly analysis, we're talking about what we expect price to do next. So for example, I'm expecting price to come and take out this trend line, but not before going back up, tapping these demand zone, supply zones first.
Okay, but what if like it doesn't go to plan for that week?
So if it doesn't go to plan, so for example, like with the dollar, I didn't think it would take out this low. I was expecting it, but I didn't know when. Then you just adjust and you be flexible. You reanalyze, you look at you just basically analyze again. So now this is happening. Like, for example, let's say I'm expecting this to happen, right?
Yeah.
But what if that doesn't happen? What if it just continues up? Then what I would do is on a daily basis, when I come to the chart, after the Asian session is printed, I will look at where's the possible liquidity that price wants to take out. So for example, let's say this is the whole Asian zone right here. Yeah. And it decides that it doesn't want to go down. Yeah. I would look for an area to buy under the Asian zone up. Yeah, so I'm looking for area to buy under the Asian zone upwards. But if it keeps breaking upwards, then that's the part where you have to be patient and you have to wait for your sell. You have to enter on what you see. Okay.
And last question, based on what Ali said, yeah, I didn't quite get it. He said if the price wicks below your order block, is this valid? Is that what he said?
Yeah, if it wicks below it, but it closes inside of it, then it's still valid.
Oh, okay, yeah, no, I understand.
Like for example, had this wick gone like this, yeah, so this wick here, had it gone like this, but it closed inside, it's still valid. That's just a liquidity grab.
Okay, so that wouldn't, so would you now analyze from that?
Yeah. Yeah, so as long as it wicks and then changes character, not if it wicks, but then it still respects basically the trend going upwards, as in like, let's say it wicks like this, but then it still keeps making like higher highs like this, then it's not valid, okay? But if it wicks your high, then it drops below, then it goes back up, then it is valid.
All right, that's fine. That's all. Jazakallah khair.
Yeah, okay. All right, cool. We have a question from Adam. Yes, bro.
Yo, Saleh, did you analyze gold already?
Yeah, I did
yeah.
actually.
It's okay.
Yeah, no, I just spoke about how I think price may take this equal high and then drop. However, you should be conscious of this zone here, this demand zone here. But based on what we looked at with the dollar, I believe that that low will get taken. So that demand should fail. However, it all is dependent on if price breaks below this low. Gold may consolidate. We don't know. We have to kind of like judge as price is kind of playing out, if that makes sense. Okay. All right, cool. We have another question from Khaled. Oh, sorry, bro. Accidentally muted. Okay.
Yes, my bro.
Yes.
So obviously when you're looking for a change of character, yeah, on the distribution, you look for it at the bottom, and then for accumulation, do you look for it at the top?
No, so for accumulation, you look for it at the bottom, and distribution, you look for it at the top. So the change of character, you want the change of character in an accumulation. Accumulation will go like this. You want the change of character to be to the downside. So you're looking for bearish engulfing.
Okay, cool.
Yeah.
And then for distribution, you look for bullish.
Yeah, no, for accumulation. So accumulation is for buying, distribution is for selling. So accumulation will be like this. So once you get that spring that comes out, then you're looking for a change of character to the upside. So
Okay.
yeah, so you're looking for bullish engulfing in accumulation, and you're looking for bearish engulfing in a distribution.
Okay, cool. Got it now. Yeah. No
Yeah.
worries. That's fine. Yeah, got it. Thanks, man.
No worries. All right, guys. It's been about 50 minutes, an hour. So no more questions. I think there's no more questions at the moment. Okay, we have one from Mohammed Kadar, but yeah. One more question. Last question from Mohammed, yeah? All right. Yes, bro.
And yeah, Assalamu alaikum, Salah.
Alaikum salam.
And I was going to ask you, let's say you have all the confluences, but then let's say it's the beginning of the London session. You have a nice order block, all the confluences are there, but you just have an Asian high at the above your order block. So would you wait for the Asian high to be taken out, or would you enter off that order block?
All right, cool. So obviously it can depend on when the Asian high was printed. If it's an old Asian high that's been respected, like in a sense, like there's been like 2 or 3 days, then it's kind of still worth taking the supply below the Asian high. However, it's better to, because basically it's all dependent on your risk management and your trading management. So really it comes down to preference. So if you're like, no, I'd rather wait for the Asian high to get taken out, then you wait, you don't take it. But if you don't mind, okay, I can risk it. It's less of a confluence, but I can risk 0.5%, 1% on this, then you can take the trade.
Okay. Okay.
Okay, is that your question answered? Yeah, no worries.
Yeah. Thank you.
So I just wanted to end on this for you guys. Yeah. So in terms of what I was literally just saying, the reason why backtesting, having a journal all helps is because as you're building up this data, you'll understand. So like the question that Mohammed just asked, if you understood from your backtesting and your journaling that, let's say 7 times out of 10, when you take the trade that has taken the Asian high, it wins, 3 times of the 3 times it loses, let's say, for example, and then you have some other data where, okay, when I take it, when the Asian high hasn't been taken, I lose like maybe say 5 times out of 10. Yeah. You're more likely to go with the higher probability setup. That's what it's all about. It's about what the higher probability is saying. So when you backtest, it's for a reason. It's one, so you can get confidence in your trading ability, but also so you can get data to see which trades work more than others. So you'll be able to understand, okay, cool. When I do this, this doesn't work. When I try this off, when I trade at this time, this doesn't work for you personally. Don't think that, okay, cool, just because it doesn't work for you, it might not work for someone else. Okay. There's certain scenarios where somebody might trade something in London session that you lose, but they seem to win. It's just because they have different conferences for why they're trading. Although we all learn from the same kind of methods and stuff, everybody has their own eye on the charts. So you need to build your own confidence in terms of your own trading ability. You need to build your understanding of how you trade and what you can see and what works for you. And then you take that going forward, and that will help you a lot. A lot of the times people come back to me and they say, okay, I was trading this, but now it's not working. What should I do? What should I do here? And I'm like, look back at what you was doing that was working, and just, that's what you should be working on. Sometimes it's not about adding new things on. It's just about refining what's actually working for you and just sticking to that. Because you'll get to a point, and most of you guys are probably at this point already, where you've got the strategy, you understand what's going on. You have this little bit of feeling like, I feel like I need to improve somehow. Even though you're profitable or most of your trades are working, you don't need to improve. It's just psychology now, where you need to be more disciplined, maybe stick to what you're doing, and just work on basically staying in the game. Okay, so I just wanted to end on that, just a little bit of a psychology advice there. But yeah, happy trading as usual. See you guys in the next week.